Hello, this is Randy Lindsay with Hawkeye Traders. I want to give you a very brief update on the current market situation, what we're looking at. Just want to say welcome to summertime trading. Summertime trading is usually characterized by choppy range-bound price action, lower than normal volume, and not a lot of real good action. And that's usually because a lot of people are going on vacation. A lot of traders are stepping away from their terminals and going out and enjoying life with their families and leaving the algorithms and bots back to do most of the heavy lifting while they're gone. So that usually ends up leading to choppy range-bound trading and very chaotic price action. Of course, through all the noise we heard from the most recent coronavirus bloodbath, there's a lot of uncertainty that's still following the market and where it's going. The huge downpull with the momentous recovery coming back into an area which now has failed to go into previous highs, with one exception, of course, and it's the Nasdaq. But what we're looking at on the S&P is a range-bound market right now that is in consolidation, as noted by the white trend dots, and a winding up of energy. Now, this energy can be broken to the long or the short side, but looking at volume is still showing not really any clear direction other than potentially to the downside. While we have rising volume coming up into rising prices, this rising selling volume should be leading to selling prices, and it's not. Now that prices are starting to drop, we're starting to see declining volume. All in all, we're still seeing a general feel of selling pressure, but we're not really seeing any price action supporting that. So that just tells me we're in for some nice choppy action here for the next several weeks. Looking at volatility, you can see volatility tried to break above 50, never got close. As it reached up into the almost new highs, it came down pretty good, but not appreciably. It's plateaued out now. We have a nice, flat, stable volatility. So don't expect this market to really do anything big either way, probably throughout the summer until we start getting into August and time for hopefully good news to come from Corona or possibly a resurgence of news from Corona, people getting back to a new norm. And that's probably what we're looking at developing at this moment. Overall, we can see energy from the Hawkeye Fatboy coming out of these markets. It looks like we're getting into a near-term oversold value from the Fatboy, showing all the major markets in a descending energy cycle, with the exception of gold. Gold being a rising and building energy cycle on that, and we'll have a look at it in just a little bit. So the S&P, we're in range bound. We're looking for this range to be broken. We can see the low side and high side of consolidation. So these are the ranges that we're looking at prices to stay in for quite some time now. The Nasdaq, very quickly, is in an uptrend, but it's in a congested uptrend now. You can see it has a nice range that it is going to hold in, and we're watching for that. This top was very weak by both price and volume. So I'm not looking at this to break out anytime soon, either to the long side or even to the short side, because we'll need to see about 9,300 break before we'll see any type of downside pressure. The Dow, again, same story. Neutral trend dots. We have a little bit more pressure to the downside as the industrials are starting to weaken a little bit. We're watching for these stops, which are currently green, to turn red. If we can get a close down below. Yesterday's rally from the low of Friday did create new lows, but these lows are still tempered by yesterday's big rally back up into that trend dot. So we're watching these markets continue to do this type of cycling and analysis. So looking into gold, gold is topping as well. Looking at, we're coming into a near-term triple top. Looking at the weekly chart, you can see that that top is plateauing, and you have a rising base, which is a bullish flag setup. And you can see on the monthly also that we're not quite there, but we're looking at a potential ceiling that we're coming to. So it's a crucial point for gold. If it's going to break, it needs to break out at this point. The Huey is the index of the gold isn't showing it's supporting the breakout with the exception of this buying volume that's coming in here. So if this is a good support for that to break out, then we need to see the Huey come out with strength really to support that, and even on the monthly has not broken above its high side line. Looking at bonds, the normal rotation out of stocks and into the bond markets is showing an increase, so watch out for that. We're looking at prices getting into a stable range above 180 in order to support bonds in that area. If we see any type of market volatility coming back in again, bonds might be the one that benefits the most from it if the rest of the stocks take a beating on that. So be watching for that. Last but not least is crude oil. Crude oil has gone into a stable trading range around $40, $42 to $37 in that range. So prices again might be in a stable, choppy range, waiting for a price to break higher than the previous high or below this most recent low. So welcome to summertime trading. Don't expect a lot other than some choppiness. That means you'll have to be on your guard. Make sure that you keep your profit targets close by and keep your stops at the ready. To learn more how to do this analysis or to get your very own copy of Hawkeye, click the links below and find out how you too can understand the relationship between volume and price and learn how to trade the Hawkeye way. Thank you.